Good afternoon, everyone. Welcome to the Audit Committee meeting for October 29th, 2024. Thank you all for joining us today. Nicole, can you please call the roll?
Chair Ray.
Present.
Directors McMillan.
Yes.
Smith. Vespi.
Present.
Chair Ray, you have a quorum of the committee.
Thank you, Nicole. I don't see that there are any additions to the agenda. Are there any members of the public who wish to speak and address the committee on items contained in this agenda?
If there are public speakers in the Zoom waiting room, please press *9 if you are listening by phone. I see none.
Thank you. I have no chair's report, so we'll move along to the approval of the Audit Committee meeting minutes from September 24th, 2024. I assume everyone had the opportunity to read the minutes. Motion from Director McMillan.
I'll second.
Second from Director Vespi. All those in favor say aye.
Aye.
Anyone opposed? I didn't say aye. Aye. So it appears the item passes. And there are no consent calendar items. So we'll move along to the action discussion portion of the agenda. And we have 5 items under the action discussion portion today. And Chris, could you please kick things off with the status of the fiscal year 2023 auditor recommendations?
Yes, great. Thank you, Chair Ray. I'm Chris Woods, the controller here at the San Diego County Water Authority. And last year, we had a couple of recommendations from our auditors having to do with our CIP, our Capital Improvement Program. And we just want to give you a status update. And essentially, they're all resolved, but I'm just going to read through them really quickly. The first one was Finance Department staff involved with cost capitalization assessments, including CIP projects and recording of activities into the accounting records will undergo capital asset training. I can say that our senior accountant over capital assets and our accountant have both gone through training through CSMFO. And I myself, I've actually been a trainer on the capital assets course for CSMFO. I've done it now 3 times. So we've met that recommendation. The second one, accounting division staff will participate in the budget planning process by attending meetings held to discuss planned and ongoing CIP projects, along with overall budget development. We do that currently, and it's currently ongoing. In fact, every week we have a meeting, the budget group and the capital improvement program staff talking about projects for the upcoming budget. So that is a continuing recommendation that we're meeting. The third one, Water Authority-wide training to include members from all departments of the Water Authority charged with developing, overseeing the CIP and non-CIP projects. Will be held with Davis Farr and the controller conducting the training on the accounting rules and capitalization versus expensing of costs and appropriateness for projects being recorded to CIP. We did do an agency-wide training back in July, and we had over 60 employees attend it. It was online, and we had really good attendance on that. So we met that. And then the last one, update the Water Authority's capitalization policy, which was last updated in 2018. We've since updated it. We've added at least 12 pages to it, exhibits, questions and answers. So a really great document. So this has been completed as well. And that concludes my comments on the status of last year's recommendations.
Great, thank you. Sorry.
Good afternoon. Thank you for joining me today. As mentioned, I'll be reporting on the audit results for the fiscal year ending June 30, 2024. We did issue an unmodified opinion on the financial statements on October 9th, 2024. That is the highest level of opinion that can be received on the financial statements. Indicates that the financial statements and footnotes are presented fairly in all material respects and in accordance with generally accepted accounting principles. We also issued the Government Auditing Standards Letter, which is also known as the Internal Control Letter. There were no recommendations this year, significant deficiencies, or material weaknesses. We also did not have any material instances of non-compliance. Lastly, we issued the Communication to Those in Governance Letter. Would also indicate if there were any journal entries. There were no material or immaterial journal entries detected as a result of our audit procedures this year. It also indicates the sensitive disclosures included in the footnotes, which are the fair value of investments in footnote 2, the pension disclosures in footnote 12, and the OPEB disclosures in footnote 13. Lastly, it also indicates the significant risk audit areas. So in addition to our standard audit procedures of substantively testing all of the material balance sheet accounts and analytically testing the revenue and expenses, we also had some areas of focus for inventory, litigation, and construction in progress. So for inventory, there was a large increase in the inventory balances. So we confirmed the acre feet with the City of San Diego for the San Vicente Reservoir, as well as obtained the underlying records for the calculations of the inventory value. For litigation, we obtain attorney letters from the water authority's attorneys, evaluate those and the estimates of claims payable. We did not have any adjustments to accruals noted based on our review. And then for capital asset accounting, due to the significance, the amount of activity, we always test 65% of the construction in progress. So we obtain general ledger detail for the larger projects, make selections, test invoices to ensure that those are properly recorded and will result in an asset to the water authority. We did not have any exceptions noted. As I mentioned, no journal entries to report. Lastly, each year we're required to perform an unpredictability test. This year we selected vendor contract testing as our unpredictability test. We had no exceptions noted, but I wanted to let you know that we tested 9 total contracts. We reviewed the contracts for items that bidding was performed on each contract. The amounts paid to the contractors didn't exceed the contract value, and that they were appropriately approved by the correct level. And we did not have any exceptions noted as a result of that testing. And with that being said, I can answer any questions over the audit process. Yes, Director McMillan.
Well, yeah, I think you did mention something we've asked in the boardroom too. What was legal's opinion of our liabilities, potential liabilities? You said it was accrual. I don't know if you made an entry or you left it where it was.
We did not make any entries. So the estimates that the Water Authority has recorded, we left as they were, and we didn't have any adjustments. There are several cases.
You didn't adjust them to what
we did not.
Legal may believe it now.
They're recorded based on estimates from management and discussion with the attorneys. So there was nothing in the letters that was out of the ordinary from what was already recorded.
Okay, well, how current were those? I mean, because if you did it 3 years
sorry.
ago.
We obtain those letters through the date of the audit opinion, and we follow up with the attorneys within 5 days.
Your letters, but I mean, how current was your information?
I speak with the general counsel before the conclusion of the audit itself and get any updates, and there were any updates as of the issuance of the financial statements.
Okay, okay.
Thank you. Do we have any other questions? No. Okay, great. Thank you very much, Shannon. I appreciate it.
Thank you.
Moving on to the third item, Chris Wojcik, the controller, will now review the draft audited annual comprehensive financial report for the fiscal year ending June 30th, 2024.
Okay, thank you, Chair Ray. And the presentation should be coming up on the computer screen momentarily, but I will move forward as well. Okay, there it goes. Thank you. And next page. So I'll just go over a recap of activities, summary audit results, and other matters, operating loss comparison, fiscal year 24 versus fiscal year 23 ACFR highlights, and then the next steps. And next slide. Okay, so recap of activities. Okay, so the last audit committee meeting was on September 24th, and which was the second meeting. This is the third and final meeting for the committee for the year. Since then, staff has completed the act for itself. They've completed the audit as well. It was on schedule. The audit subcommittee had a separate discussion with the auditors. And Chair Ray, do you want to speak to that just a little bit, or?
No,
Okay.
I don't really think there was anything major to discuss that we discussed.
Okay, and
I'm trying to think. No, I don't think so. No.
And I'm sorry, leading up to that, it's just a requirement of the committee that they have a meeting with the auditor without management present. So that meeting did happen. It happened with Chair Ray, Director Vespi, and Director McMillan in attendance, along with audit partner Shannon Ayala. Okay, very good. The audit committee itself has had a chance to review the draft fiscal year 24 ACFR, and it reflects their comments. And I do have some information I will go through, but if there are any comments from the directors, please feel free to voice them during the presentation. Okay, next slide. Okay, and here's just a very quick summary of audit results and other matters. So with respect to the audit itself, was there any outstanding matters? There were none. New GASB implementations, there was one GASB Statement 100, which had to do with accounting changes and error corrections, did not affect the water authorities, pretty much just standardizing reporting requirements, but again, didn't affect the water authority. Significant unusual transactions, yes, this past year we did have two, and they both had to do with inventory, which Shannon spoke to briefly. One of them, just a little insight into it. In the past, all of our water we put into storage was water we acquired from MWD. And just this past year, the majority of the water, or a good chunk of that water that went into storage, was actually from IID, the IID transfer water. And so when we were putting the water in, we were just trying to make sure that we have the correct pricing of what we're paying for that water, MWD water versus the IID water going into storage. So that was something new this year, because all the water had always been MWD water, and now we recognize there can be a shift. So we're actually tracking that. If it's a blended, we're using a blended rate that goes into inventory. So we're tracking it better and reporting it. And then the second one is the IID transfer water, transfer water, which is early delivery monitoring and recording. That also is something very unique. We have an agreement with the Imperial Irrigation District to deliver water to us, and it's billed actually at 16,600 acre feet every month. But we can do a side letter agreement with them in which we can actually speed up or delay delivery of certain of that water. And during the calendar year, or during this fiscal year, we actually did speed up delivery of some of that water. And that resulted in an adjustment that we recorded at fiscal year, and we internally caught it and recorded that. It amounted to about 19,000 acre feet, which went into storage. But it's just something that's just, we do that if we have a need, if we have, like, for example, shutdowns, we just want to make sure we have enough water to be able to meet our demands. And so we can actually speed up or delay the take of that water. We still take 200,000 acre feet every calendar year regardless. But again, we can move it up, and we just happen to take a lot more by June 30 instead of the even 16,000 acre feet every month. So that was something that was unique for us this year in terms of transactions. Yeah.
The payment for that water still occurs at 16,000 acre feet, but delivery can vary, right?
Exactly,
Good,
correct.
got it.
And so at June 30, we received 19,000 acre feet more. So we actually accrued a liability. Even though we didn't pay for it, we actually accrued a liability because we received it and it is sitting in the storage. Mm-hmm. Going forward, uncorrected audit misstatements, there were none. Corrected audit misstatements, none. Financial presentation, disclosure omissions, there were none. We've included everything in the financial statements. No non-GAAP policies or practices that we're reporting in our act for. Again, the auditor's report, which was an unmodified or a clean opinion. And I won't have to read through all of these, but significant accounting estimates, pension and OPEB plans, litigation, and depreciation, again, those are significant estimates for us, and we've applied the accounting rules appropriately. Disclosures are included in the financial statements. Again, no audit findings or issues or recommendations this year. There were no subsequent events since the issuance of the financial statements, even to today, or there's been nothing. And then we also include in the ACFR itself the continuing disclosure, not a required part of the ACFR. but we include it in there because it also goes to our bondholders and different investors, and so we just include it in there as a good practice. Any questions on that? Okay, next slide. Okay,
On the one line, you said significant estimates for, those are in your book, those are noted as estimates then?
yes, the pension and the OPEB, and again, we rely on actuarial evaluations that give estimates. They're the ones that perform that analysis for us, and then we record activity based on that.
Why, depreciation is an estimate or is it not?
It is, because it's a gauging of what is the life of an asset.
Right.
So
So you consider it an estimate?
yes. Mm-hmm. Okay. Okay, now, just quickly, we just wanted to point this out, operating losses. We've been showing operating losses for the past 5 years, and essentially it just means that the operating revenue is not covering the operating expenses plus a charge for depreciation. And governmental funds, we are designed to operate, we operate as an enterprise fund, and we were designed to mirror the private sector, in which, our operating revenues are supposed to cover operating expenses and depreciation. But we did, even though we have had a run of operating losses, we did want to point out that we also earn and collect non-operating revenues, and those non-operating revenues, while they pay for non-operating expenses, they are also used to offset operating expenses. So there's not anything that's really truly concerning. We just wanted to convey that. We do have sufficient funds and an unrestricted fund balance, and we continue to maintain our assets, service our debt obligations, and meet debt covenant compliance requirements.
Chris, I have one question about non-operating revenues. Mm-hmm. So there was a note in the MD&A about desalination plant shortfall revenues. Could you expand on that concept a little bit and of the plant being off and?
Yes, and give me one moment here.
It's on 37.
Yes. I was just trying to make sure I knew the acre feet that the plant is supposed to deliver to us, which is 48,000 acre feet annually, and so there's in some years, because of things that are affecting the plant, like sometimes there's like an algae bloom. We've heard of that and seen that before, and that kind of inhibits the plant from producing and sending enough water to us. And there could be other reasons as well. But when the plant is not able to deliver the full amount of water that we order, up to the 48,000 acre feet, they have to actually pay us a sum of money, which is a desal shortfall revenue. And we receive that and record that as a non-operating revenue. Didn't happen this year, and it happens sporadically. It does happen from time to time.
Got it.
But it's a non-operating, yeah, but I mean, to me, where I come from, I mean, that's the best thing that can happen, I mean, given the cost of your source. So there's no other accounting for that. It's just a direct expense to Met then, I would say, to replace that water.
If we need the water.
Yeah, if you need
True.
the water.
Mm-hmm. Yep. Mm-hmm.
But the other is the offset is just a penalty, a contractual penalty for
Yep.
non-delivery.
Yep, you got a contractual penalty.
How
Yes.
much does it make with it?
For desal water, that is the most expensive of the supply sources, and I don't have our cost of service study here,
Not the
but
cost of it, but the penalty.
it can vary by the amount of acre feet that couldn't be delivered, so it's not correct. Yes.
But I mean, roughly, I mean, $1,000 an acre foot or what?
I don't know the specific calculations. I think it's tied to the actual acre foot, that amount that couldn't be delivered based on what the price is that given fiscal year.
So they pay us like $32,000 to $4,000 an acre foot for that non-delivery?
We have to get back to director.
Yes.
It's a calculation that's based on a
It's
point of
becoming even
time.
more worth it to hire seals.
Well, we'll get back. So that just so we're clear, you want to know the desal rate when there's a penalty for non-delivery.
I
Yeah,
guess,
okay.
I mean, they have to pay. It's obviously to our benefit.
can send that to Water Resources.
We can. They would be the appropriate ones to answer. But of course, we would like the plant producing, as it's intended. And this
You
is.
would? I would. Not me.
Thank you. And then moving on to the next slide. Okay, and this is just quickly just a comparison of fiscal year 24 versus fiscal year 23 on an actuals basis. And just some highlights, some quick highlights. So net position did increase by $41 million, and $15 million of that was an unrestricted net position increase, which is, again, assets available to use for operations. And our unrestricted net position is $326 million for June 30, 2024. We have $366 million in cash and investments, which is a decrease from fiscal year 2023. We paid off $55 million or 3% of debt this past fiscal year, and we're going to pay a similar amount this coming fiscal year as well. We early paid off the QSA JPA liability, a minor amount, but still it was a liability of about $3 million. And then the last bullet point there, we had a $52 million increase in water inventory. Again, those are the take or pay contracts. We had to receive the water. We had reduced water sales, so we did take that water and we did put it into San Vicente. So it was an increase of about 42,000 acre feet from fiscal year 23. I can say in fiscal year 25, we actually have sold about 30,000 of that excess amount from the prior fiscal year. So we are selling that excess water that we had added in fiscal year 24.
I think you mentioned that early payoff of QSA, you had a discount or something?
Correct.
Yeah.
It was
I think it was in the
Yep.
board report.
It was advantageous, yes. And there were only 2 more fiscal years remaining on it, and the dollar amounts were small.
And
It was
that's
just,
that's the end of our liability.
yep, correct. Okay, so changes in net position, again, as we all know, water sales reduction was about a $26 million reduction in revenue from fiscal year 23, or about 52,000 acre feet less water that we sold. Again, 2 years of wet weather, the impact of that. The second bullet point, water revenues aided from the System Conservation Implementation Agreement. So we received $39 million in revenue from that, which was helpful to our bottom line. And then the other significant revenue item was the exit fee from Fallbrook, which was $8.5 million. And then just lastly and quickly, we've completed the aquifer itself. We do believe that it will meet, we file each year with the GFOA, Government Finance Officers Association, to pursue an award for excellence in outstanding reporting. And we do believe the aquifer, again, meets the requirements this year. Staff is very happy. And and that concludes my formal comments. If there are any other questions, I'd be happy to address them.
Are there any questions?
You got a lot of doctored pages there.
The only exit fees we received this year were then the 8.5 of Fallbrook.
In this audit cycle?
In the fiscal year.
We just
Period.
received some today.
For the year.
For the
Period.
fiscal year.
Fiscal.
But we did just receive some.
Oh, okay.
Tomorrow, potentially, we will receive an exit fee payment from Rainbow.
Rainbow tomorrow's. Okay, no, I realize we got that period. Okay. So was that their total?
For Fallbrook, yes.
Do you have to add if the rainbow payment comes in tomorrow, do you have to add to your subsequent events?
No, because the financials are already issued.
Even though it hasn't been presented to the full board?
Everything up until the audit opinion date.
Oh, okay, got it.
And I'm sure at the next A&F committee meeting, if Rainbow does make their payment, that would be something disclosed to the board, yes.
But it'll be reflected in the next year's audit.
How was that carried? Was it carried as an asset or anything, the future payment?
It was not, no.
It was invisible.
Correct, uncertainty. The separation had not happened by that date, and it was still uncertain. I mean, there was going to be separation, but when it could be.
Tomorrow will become an asset.
Good cash.
Okay.
And then lastly, next slide, next steps. Again, we will formally actually publish the aquifer itself. We'll be sending it off to the printers so they can print nice bound copies, which will be distributed to all the board members at the next board meeting. And then the audit committee presentation to the board, a little bit of housekeeping that's required. So once this meeting concludes, we'll actually complete the annual report for the committee. We have to wait until this meeting is decided, and then we'll give it to all the committee members to take a look at and provide any comments to that, and then we can finalize the actual annual report. And then at the November 21st final board meeting of the year, the audit committee will deliver the annual report as well as recommend to the board the accept and file both the annual report and the fiscal year 24 ACFR.
Okay, great. Thank you very much. And thank you to all the staff for all their hard work in preparing the ACFR for the person who does that in my district. I know it's a lot of work, so thank you very much. I appreciate all your dedication. The next item is for the committee to accept and authorize the chair of the audit committee to transmit the annual comprehensive financial report for fiscal year end June 30th, 2024 to the board of directors.
I'll make the motion.
Okay. Motion. Okay. Motion by Director Vespi, second by Director McMillan. All in favor say aye. Aye. Anyone opposed? Nope. Motion passes. And lastly, again, Chris will discuss the audit committee annual report and process to complete the transmission to the board.
Yes, thank you, Chair Ray. Excuse me, I got a little ahead of myself there by announcing it ahead of time. So once this meeting concludes, we'll actually draft the annual report from the committee. We'll make that available to the directors. They can submit any comments, and then we'll incorporate those, and that will wrap up the report itself. And that will be distributed to the board. And that would complete all of the required work of the committee for this calendar year.
Is that a digital report, or do you print it?
It will be included, well, we're going to email it to all of the directors for comment, and we can take any comments either through email or by phone call is fine.
Okay, so everything's...
Okay, if there are no other questions or comments, we'll move on. And we have no information items, so I don't believe there's any further business, so we can adjourn the meeting.